Happy Labor Day, everyone. Hope you guys are enjoying enjoying the holiday and hope you guys enjoyed the weekend. And I'm glad you guys can make it to this video. So, in this video, I'm going to be going over updated segments in my process of trading. I'm going to show you guys my trading journal. I'm going to give you guys quotes like I always do. If you guys haven't been keeping up to date, the book that I'm actively reading right now is Market Wizards by Jack Schwager, who has interviewed top traders. In my opinion, I think that it's a great idea to understand how top traders trade or understand how top traders think. Um, this kind of ties into Napoleon Hill Think and Grow Rich because, you know, um, we're all human beings, and I think that you can achieve any level of success by changing the way you think. So you can truly think and grow rich. So in this book, Market Wizards by Jack Schwager, he interviews people, top traders, top people who are, billionaire traders or worth billions of dollars, hedge fund managers, successful hedge fund managers. He interviews these people such as Richard Dennis, Michael Marcus, Bruce Kovner, and they give fantastic advice, life-changing advice in this book. Um, it truly is like a portal to abundance. So that's my thoughts so far, and I want to share with you guys a couple quotes. Once I share with you guys a couple quotes, if you guys don't mind dropping down in the comments what you think about each quote, and also tell me what is your best quote out of them all. So I'm gonna also have this it's like a ripped a sheet of paper out of a spiral notebook or whatever, and I started writing down my risk grading chart. This is what it looks like. So you can see risk grading chart is the title, and then it says grade. So A plus, B plus, C plus, and then for each individual setup, you can see it correlates to the amount of risk that I'm willing to take on for each setup for an A plus, B plus, or C plus setup. Um, and then in the corner, you can see I put process over process. So and then there's also another side to that. So this is like a card to abundance. It's like it's better than a credit card, you know. Um, I really don't know about the whole black card, thing. I do know that there's like certain cards where people can like access unlimited amount of money or whatever at a certain level, I think. I don't know. I'm not really sure. Don't quote me on that, but this is truly a tangible, a physical thing that you can touch, a physical, you know, um really leads to success. Something that you can touch that leads to success, and you can also look at it and study it, and I don't know. But I definitely think something like that, having it, being able to carry it around with you if you want to remind yourself about certain parts of your process that you've recently made changes to, you can always look back at it, or reread it, to help with your process, which will flow into profits. So, um, yeah, so risk management is something that Bruce Kovner, especially, who is a billionaire trader, he's spoken about a lot in here. Um, so just keep that in mind. Risk management is a big part of being a successful trader. Let's go with let's go with, Okay, so in this book, Richard Dennis, who's a successful trader, he was asked, "Do you consider that period worthwhile nonetheless because of the lessons learned?" Meaning, on the earlier stages, he's asking, in that period where it was you were, in your earlier stage of you being a trader, um, do you consider it worthwhile? He says, yes, in retrospect, I would say this to new traders, although it may not be a reassuring thought when you start, you ought to be as bad as a trader as you are ever going to be. So he's saying make as many mistakes as you possibly can as a beginner trader in the beginning of your trading journey. And he says he's asked because it is less expensive at that time. And he says, right, you shouldn't be too surprised if you really screw up. It's more cost effective making your lessons or learning from your lessons and screwing up financially with smaller accounts than it is when you start getting to the thousands or tens of thousands, hundreds of thousands, millions of dollars. Like I've been asked, how come you don't, hey Anthony, how come you don't just throw, thousands of dollars or tens of thousands of dollars into the markets? Oh, you're trading with a couple tens of thousands of dollars right now, right? When they know I'm in even though it's 6 years that I'm trading for, I'm still in the process of removing bad behavior, removing, refining my edge, implementing proper risk management, tweaking or swapping out bad habits for good habits. Um, there's so many different things that I still am working on creating new mental blocks, working on um an entire mental framework, and I've been working on a mental framework for 6 years, trading 6 years. So I believe that this is what it takes. It doesn't matter how long you have to get it right. I think that I truly believe that, once you just keep on adding value to your mental structure, your mental framework, and creating mental blocks inside of your mind, it'll it'll guide you into the path of being this huge character in the markets that you can be. Anybody, no matter who you are, it doesn't matter. As long as you understand proper risk management, have an edge, and you're consistent, and you don't react on your emotions too often, you're more objective, you have control over your emotions. I think that's what it takes to becoming this big character in the trading industry. And that's what I want to be. I want to be a big character in the trading industry. I want to be a successful trader. And I'm going to be a successful trader. This is what it takes. It takes journaling. It takes reading, not just reading books, but reading reading helpful books, reading about successful traders. People has asked me, do you know anybody who's successful? Like I said in my other video. I've been asked, who do you know is a successful trader? And the answer to that question is I truly do not know anybody who's successful. I don't personally know anybody who's, showed me in person their trading account where they're like, hey, I day trade or I swing trade, and these are my profits, these are my losses within the past week, month, year. Nobody's ever, in person showed me their profit and loss statement. So I'm not gonna use that as an excuse for me not to be involved or participate in the markets. What I'll do is I'm just gonna do what I'm doing now. I'm gonna read about successful traders, read about, their mental process, how they think. What do they think about before placing trades? What do they think about after placing trades? What do they think about when they take wins? What do they think about when they take losses? Once you start adopting the mentality of somebody who's a successful trader, realtor, whoever, uh, then you start to become somebody like that. So, and then your profits start to look like their profits. And even though it might be billions of dollars that they're trading, you can start from $100, trading account and then build your way up to now, instead of doing hundreds of dollars, now you're trading with thousands of dollars. Then from thousands of dollars, it goes to ten thousands of dollars. Then from tens of thousands of dollars, it goes to hundreds of thousands. And then from hundreds of thousands, it starts scaling to millions of dollars. So it's all a process, and I think I believe in the journey, so I believe in the journey so much that I'm not willing to stop. I'm not stopping at year six. I just can't. When you just come too far to give up, it's just, quitters never win and winners never quit. So if you guys want to stay up to date with the types of trades that I'm taking on a weekly basis, then join my free Discord. My link is in the bio. So you can join my Discord. I'm always sending out the types of trades that I'm taking. As soon as I see the trade set up, if it makes sense, then I'll drop it inside of the Discord. It's a free community, and I think it's extremely valuable. So yeah, that's in the description. Also, before I get into sharing my screen, if you guys haven't already, like, comment, subscribe. Um, I haven't shared with you guys any. I think I did just share you guys. I don't know. Did I share with you guys a quote yet? I feel like I did. I'm gonna share with you guys another quote. Is the fun aspect still there if you are doing it 13 hours a day? So Michael Marcus, he was asked, is the fun aspect still there if you are doing it 13 hours a day? Meaning, if Michael Marcus, hey, with you being a trader, is there still a fun aspect of trading within you after doing it 13 hours per day? So he says no. If trading is your life, it is a fortress kind of excitement, but if you are keeping your life in balance, then it is fun. I think that's an interesting I think that's an interesting way to think about it because I can resonate with that because the whole purpose, the whole reason behind many people, including myself, who want to become a trader, a full-time trader, is that they want to escape 9 to 5. They want to buy their time back. They want to have freedom. They want to be able to work on their own terms. They want to create their own rules. Uh, they want to be able to give people advice. Well, I personally want to be able to, give people advice. Um, they want to, pretty much be a figure that people are able to look up to. So that's what I think about that. Let me know what you guys think about that. And also, I'll give you guys one last quote. Okay, so this is another quote by Michael Marcus. He was asked, there are very few traders who have been as successful as you. What do you think makes you different? He says, I have seen others make money much faster than I have, only to wind up giving everything back because when they start losing, they couldn't stop. When I have had a bad losing streak, I have been able to say to myself, you just can't trade anymore. So that is by Michael Marcus. That's his response. And he's pretty much saying, I can be $100,000 trader. You can be $100,000, trader. But when, you know, let's say I start taking the same losses that you take. Let's say we took the same trades and our strategy is the same and we're risking the same amount, but only thing different would be that once we took the same trades today and we took losses on our trades or trade that we took today, I might say, hey, I'm gonna go back into the markets and try to find trades to make up for what I just lost and just, use that as an excuse for me to be in the markets. It could be a reasonable reason to get in the markets to make up, but you don't want to start forcing trades because, you want to, first off, I think you should have marked out, opportunities from the beginning of the week so that you're not hunting for trades throughout the week just in case, you you lose, you taking a loss. Um, and obviously you want to wait until price comes to these points and areas of interest where you feel like the market could have an opportunity presents itself for you. So I think that helps prevent that from happening. But yeah, that's a big one, A lot of times, taking losses can hurt you in a way where you start chasing and seeing things that are actually not your strategy, but you start creating scenarios to where you want it to be a part of your strategy, but realistically, you have to be, real with yourself and say, let me step aside. I just took a loss. Let me step aside. Maybe my next um maybe my next trade might be less risk. Maybe my next trade I just won't take it because I feel off. If you feel off, then I think you should go with your intuition, go with your feeling, listen to yourself, and I think it's a great idea to just respond accordingly. So think about how you feel. Think about because emotions play a huge part, especially with being an independent contractor as a trader. Traders are independent contractors for the most part, unless you're working with, a firm. You know, traders are virtually contractors. Retail traders are, contractors. So I think you should be the voice of yourself and listen to, when you feel like things are off. Take some time off. Could be a couple hours. Doesn't have to be days, but it could be even hours. If you need days, you take days off. If you need weeks, take weeks off. But I don't personally recommend it. I think that being engaged, I think a couple hours is enough of staying out of the markets. Maybe a day or two is enough for staying out of the markets. If you feel that it's needed, fine, you know? But yeah, I'm gonna start getting into the journal and I'm gonna start showing you guys where we are, where we are in this journey. So, and it's been rocky. I had an $1,000 account that I brought to over $2,000, and then once it was at a little over 2,000, it had went down to like 1,600, and then from 1,600, it went down to like 300 or 250. It's been super rocky, and I think back to back to back to back losses. And I was going against my trading plan because the emotions started getting to me. It's like the emotions start creeping up on you. Um, and when that happens, your account's equity starts going like an airplane landing. But yeah, what's that's something that I'm, actively working on. Oh, another thing is since that time that I had, $2,000 in equity in my account, I've removed every uh Forex pair. I'm not trading Forex anymore. I'm strictly trading indices, commodity like gold, which could also be considered a Forex pair because it is versing, the US dollar. Like say USD is versing the US dollar. So it's considered a commodity, but it's also, I did research on it, considered a Forex pair. But I am trading NASDAQ. I'll look out for US 30. So those are indices. I do trade NASDAQ more than I trade US 30. And sometimes I'll be involved in UK 100. I'm not 100% sure, but I think UK 100 is similar to NASDAQ, um, in a way. Obviously not the same companies since it's in a different, it's a part of a different country's, I think, stock exchange or whatever, but like top companies in their country. But I think it respects price action to a certain degree. Obviously not 100%, but again, to a certain degree. So now what I'm going to do next is start sharing my screen. Let's first start off with my journal. So here's my journal. You guys should be able to see my TradeZella account. On my TradeZella account, I've been showing you guys percentage. I'll give you guys a glimpse of the dollar figures. So it's Monday. I've taken about four trades. I'm only down about 0.77% because recently I've been risking less than 3% per trade. So I think that that's going to be extremely helpful for the way that I'm starting to trade now. Before, you can see I was, risking 6%, 37% in a day, 6%, 5%, 6%. The percentages that I was risking, I think were 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 too much. I do truly believe that it was too much that I was uh risking, especially because of my win rate being low. Like look at my win rate. My win rate is 15%, right? It doesn't make sense to risk to have that amount of risk on trades when your what is it called? When your win rate is low. If your win rate is high, then obviously it makes sense to I mean it might make more sense for you. It would make more sense for you to risk more. But if you have a low win rate like I do, it makes sense for you to in my opinion, it makes sense for you to, risk less. And yeah, I think that's gonna be helpful long term. So I got that advice to risk, 3% or less from Market Wizard's book. So if it wasn't for the Market Wizard's book, I probably wouldn't have grasped that idea because I was introduced to the idea by, these top traders on social media and like Instagram that, risking 5 to 7% is, it makes sense. But I don't know, I don't know. Maybe maybe it works for them, maybe it doesn't work for them. Maybe they're behind these brokers who capitalize on people's losses, right? You truly don't really know about these people on social media, so and why they're saying what they're saying. You truly don't. But I I am going to continue, what do you call it? I'm gonna continue what date is today? Yeah. So I'm gonna continue refining my edge and seeing what's working and what's not working. Clearly, you can come up with your own system, right? Because look at this. Uh, 7%, right? Since I've been reading Market Wizards, I've been touching on, you know, pages and chapters such as, I definitely recommend just reading it because I don't want, you know, I don't want to make it seem like I'm reading everything to you guys from this book because I can't, right? I mean, I can, but obviously it'll take days for me to give you guys all the information in Market Wizards. I'm not even done yet, but you're gonna start seeing improvement in these percentage win rate, maybe win rate, I don't know. But obviously profit versus loss, you're gonna see differences for the better. And it's because I'm reading and taking these ideas from the books and implementing it into my system. Excuse me. So I highly suggest that you guys read. Read, read, read. Okay? I can't emphasize it more than I just did, right? Um, can't force people to read. Oh, so look, dollar amount, right? Net P&L negative 949. This has to go, right? I have to get more than 949. I just have to. I have to get back in the green. This is a account that I started, I think, last month. Yeah, I started in August. So I have to get back out of the red. This is the account where I told you guys I was up like, 2000 and then I lost like majority of everything. So, and then the account is now at like 450. Was at like 250, then it went back up a good amount, which 450 and could be better, but could also be worse. So yeah, right. So this is what we're looking at, right? So I'm gonna go back to what is privacy? Oh, ticks, pips, points. What is that? March, dollar. Oh, percentage. What is this? R. It is shown for trades with entered initial risk. This looks cool. I think this is a good idea. What is this? I thought this was a Green Day. This is a good way to look. I think R multiple and I think yeah, I'm recording a video. Yeah, so what I was saying is looking at this personally, it helps me look at make everything make more sense by looking at R multiple and percentage instead of dollar amount. I'm not so worried about dollar amount. I'm more so worried about not necessarily worried, but I'm more so interested in looking at my journey in ratios, risk to reward, and which is the R multiple and the percentage. instead of dollar amount. Um, but yeah, that is pretty much, you know, what I want to show you guys there. Next, what I want to show you guys is what I think, my thoughts in the market. So here's my trading view chart. So I'm gonna show you guys my trading view chart for I should be sharing my screen, right? Yeah. Okay, so I was in here, then I also added here. I should have held here because the market never officially broke here. I would have still been in here, but I got too excited to take profits on both of my trades. I should have at least left one to run, and I would have never had to, I would have never been in this predicament of now having to chase the markets again. So I'm gonna have to hop back in the markets, or not have to, but I'm deciding to hop back in the markets. Now, if we look at the 5 minute time frame, you can see that so this would be a high right here. If this is the high, we're gonna want to look for the low. So to look for the low, I'm saying, I see that this is the low right here. And then from this being a low, you're gonna want to look for the next high. So I see this as a high. After seeing this as a high, this price has closed below this low. So you're gonna consider this being the lowest low, right? So I think that if we have a 1 hour low right here, it was this, but now it's this. So if this is the 1 hour, oh, what was that? Oh man, all right, I don't know what's happening. Can't I write on this? Okay. If this is gonna be considered our 1 hour low, right? If this is our 1 hour low and this is our 1 hour high, currently our 1 hour high, then I think that I mean 15-minute structure, excuse me, 15-minute has gone bearish. It actually has. With that being said, because we've got a candle closer below this low right here, so 15-minute and the 5 minute has turned from bullish to bearish. With that being said, I would start looking for sells around this area. I mean, even at the 2 minute time frame, you can see that there's some, maybe I think 1 minute actually. Yeah, so right here you can see that there's some imbalance, right? Imbalance here. And if there's imbalance here, then I would look to pull this all the way down here. Typically 5 minute and 15-minute time frame is known for, creating the 1 hour structure. So what is this stuff? I don't know what this stuff is. So if it's known for doing that stuff, then, and you see 1 minute or 2 minute imbalances that haven't been filled, this could be a good risk to reward. Um And then I mean, even if we look at the 15-minute time frame, like there's a lot of imbalance that price can want to trace into right here and also right here. Furthermore, this is a breaker block. If you trade ICT, then you know that this is a breaker block. So you can sell it, right? That can be like a 1 to 11. But this is a trade setup. And if you don't take that, or if I don't take that, I'd target 1 to 8, something like that. So, but it'll be temporary just because I know that the 1 hour time frame, the 4 hour time frame, the daily time frame, the weekly time frame is bullish. So this is going to be a scalp, but I would essentially be looking for price to manipulate somewhere in this area to give me a entry for pushing price higher. So I think that this would be a good idea for ping-ponging the markets, I would call it. And this was what, Sunday or Monday? This was Sunday's low, so I don't know. Who knows what happens there? This is a 4 hour low and a 1 hour low, so that's pretty much what I'm looking at this week. I'm gonna highlight this green. Nasdaq, I don't know. Nasdaq's been showing me. I mean, for sure, this is a 4 hour high, 4 hour low, and 4 hour high. So there's enough room down here, probably on the 15-minute. Yeah, you can see that there's some imbalance here, a little bit of imbalance below this wick. 5 minute. Let's check the 5 minute. Yeah, there's imbalance right here, right? So even a breaker block if you trade at SET. Imbalance again below this wick, and then imbalance around here, also right here. So if there's a good amount of imbalances below, that tells me that we might want to start looking for some buys in this area. My concern though is, my concern though is that we might actually still be bullish because this is a 1 hour low which has not been broken, and then this is our 1 hour high. On top of that, if we look at the 5 minute time frame, 5 minute time frame indicates that we're bullish, but the 15-minute time frame indicates that we're bearish. So it's pretty difficult to understand this one. I mean, 15-minute honestly could actually be, let me see. Uh, it actually could be considered bullish, but I don't know. So difficult to interpret. Once it's difficult to interpret, honestly, I start losing interest. Like if it doesn't seem, I don't know, if it doesn't seem like a clean setup, then I kind of step away from the markets just so that I don't get confused and lose conviction. Because when I find that once I start losing conviction in the direction or don't understand the direction of the market and it's giving me like 70-30 or 50-50 vibes of bullish or bearish, what I start to do is I enter, I exit, I enter, I exit, I enter, I exit, instead of accepting the risk. So when I start seeing drawdown, so that essentially makes me risk more than the percentage that I step into the markets accepting, if that makes sense. So I found that that's a weakness where I have, and the changes that I make now are not participating in markets that seem confusing for me or give me 50-50 vibes of bullish and bearish. Right? So that can be something that you think about, and I think it'll help you long term. When the market seems 60-40 or 50-50 bullish or bearish, I just step away. I just don't participate in the markets. All right? Um, I know that that's something that'll be extremely helpful for a lot of people if they take that advice. Furthermore, bullish, right? 4 hours bullish, daily's bullish, weekly's bullish on US 30. But we've got a 1 hour bearish, right? If 1 hour time frame has gone bearish, excuse me, we can expect to see something like a 1-to-7 risk to reward ratio. And this is a potential setup that I'm looking at right now. So I think that this could potentially play out. If it doesn't, that's fine. But if it does, I'm risking maybe 1% for 7 or 8%, which is I think it's a good risk to reward. UK 100, I really want to see the 1 hour time frame shift from bearish to bullish so that I can start buying. This is a daily low, and then this is a daily high. So if this got the daily low here, daily high here, and then there's some imbalance around this area, so we could probably see a 1 hour time frame shift to go bullish once price does what it does around that area. I see a good amount of imbalance here. There's imbalance here too, but this is the high of Monday, and I think the high of Monday would get taken out. And if that happens and there's a double top or double bottom here, I think that price would take out Friday, at least take out Sunday highs and Monday highs in order to push for price to go lower. So this could potentially give us a good setup here to target the low here or the imbalance here. And I mean, yeah, that's pretty much what I think. So I'd look for like maybe a 5-15 minute time frame market structure shift around this area to target this imbalance that we're getting on the 1 hour. I don't believe that with the market looking how it's looking now, I just don't believe that price would just shoot up here to create a 1 hour high to break structure at this area. I just don't see that happening. I see this being resistance, and I see us taking this resistance to push lower. If we look at the 4 hour time frame, I mean, it's a good area to, fall short. Not only that, look at the look to the left. There's not much to honestly look to the left uh and see. But yeah, I mean, it's not that really isn't that much of a reasonable spot to be selling from. So it is I wouldn't say it's a 50-50 opportunity. I see it as a 70-30 or 80-20 opportunity to take advantage of. Um USD CAD, honestly, I haven't really been looking too deep in the US dollar or Forex again. Um, Daly's about to turn bearish on USD CAD, if I'm not mistaken. Yeah, daily definitely looks like it's gonna take a toll. It's crazy as it shifted right here. Maybe even on the 15 minute. Oh no, just the 5 minute. Um, that could have still been a good risk to reward though. What time was this? Oh yeah. Boom. That would have been a good risk to reward right there. And target the lows. It's about a 1 to 4, 1 to 5. Dang, I'm kind of upset that I missed that. Um, man. All right. Well, that's pretty much what I want to show you guys. Um, Here, I'll read you guys simple things that I have on my list, right? Trading rules for success. Only risk a minimum of 1 to 3. So risk to reward, in my opinion, I think that if you're taking a setup, I think you shouldn't be getting anything less than a 1 to 3 risk to reward. Be selective. I think that's a universal thing. I don't think that's just a trading ideology. I think that's also a universal philosophy that we should live by, being selective. Um, Taking advantage of order limits. I think order limits are overlooked, and I think that's a good automated system to implement into your strategy because you're not always attentive to your phone. You could have alerts and things like that and also miss out on trades. But if you have an order limit set in place, there's high chances of you not missing trades that give you a really good risk to reward. I've experienced that. I've experienced trades where I didn't even know that I was activated in it that hit during London session and hit take profit New York session. And I got up and I'm like, why do I have, hundreds of dollars, like $200, $300 of more profit than I did before I went to sleep, right? So just be mindful of little things, I think. I'm glad you guys were able to watch this video. I hope you guys took uh ideas from this video. Um, hope you guys are hope all is well. Hope you guys are enjoying your Labor Day and thank you guys for watching. Like, comment, subscribe, join my free Discord community. Link's gonna be in the description. And thank you guys for watching.